right, this year's rally in municipal bonds setting a new tone for the asset class. AAA munis rallied almost 50 basis points in some areas of the curve and have improved by about 100 basis points since October. Let's bring in Jamie Iselin. He's Neuberger Berman's head of municipal fixed income for today's Muni moment. Let's talk about that rally and how much life is left in it.
It's been a great market, as you point out. I think investors are picking up their heads. They're seeing how attractive the yields are. And if you go back to your point to the end of October, the market has had a really, really strong rally. I think the setup continues to be good. We had a weaker inflation print today. People are getting comfortable with duration, and they're getting comfortable with the fact that the Fed is probably going to be getting out of the way pretty soon. So I'm pretty constructive on the asset class right now.
Are they comfortable with macro conditions and I guess the prospect that we could be headed towards a recession?
It is a concern, but I think investors also have to remind themselves of what muni bonds have been able to deliver in tough economic times. It's one of the highest rated asset classes in the world, very resilient in tough economies. And so for investors that are concerned, the Fed was talking today even about a light recession at the end of the year. Muni bonds are a really, really good place to hang out and earn very tax efficient income.
How much does the rally that we're seeing in the muni space right now, though, depend on supply staying low?
It's been very helpful this year. Supply has been, by anyone's measure, underwhelming, and it's difficult to buy bonds. The technicals, I think, are going to continue to look good. A lot of firms are lowering their supply forecasts for this year, and we're also moving into a time where technically munis tend to do really, really well. The summer months, you see a lot of maturities, a lot of coupons being paid, but not a lot of new supply, so it really sets the market up well for strong returns.
So you've got supply headwinds, you have seasonals on your side as well. We're talking about, of course, the rally in high-quality munis, but what about the riskier areas of the muni market?
You are getting paid for that. All things being equal, I'm a better buyer of quality right now because you're getting paid for it. But if you look at muni high yield right now, you get about 250 extra basis points over a AA rated portfolio. I think an allocation to that just adds a little bit more yield into a high yield environment. So I think you can step out into the high yield part of the market.
Yeah. When we talk about quality, talk about some of the issuers that have actually moved up in quality. I know during the pandemic and really prior to the pandemic, there was a huge focus on Illinois, even Chicago, and we actually saw their situations, their financial situations improve pretty dramatically, and I think it caught a lot of people by surprise.
We've been constructive on the state of Illinois and New Jersey for a while when they were BBB rated credits. We've owned them in our intermediate fund, our high yield fund. What you've seen there is an economic bounce back, good management, and controlling spending. In Illinois' case, they paid down a lot of unpaid vendor bills, built up reserves, and they're paying their full pension payment every year, and they've been rewarded by the rating agencies. So there are some good turnaround stories, and those two credits, Illinois and New Jersey, are expected to come to market next week.
I'm from New Jersey, so I like to hear that. So
I'm from Illinois, so there we go.
Beautiful.
Should we tag team?
This is beautiful. I love it. So our home states look pretty great right now. When you look across the country, though, do you see any municipalities, any states that maybe you'd stay away from?
Not right now. It's interesting. Before the GFC, I'd say muni credit quality didn't enter that period in the best of shape. But when you look at the states, which are the top of the food chain in the muni market, they are sitting on all-time record rainy day funds. Their reserves are at, in the state of California, for example, they are at their legally required max that they can have in the rainy day fund. So I just don't see those problems right now, even if the economy gets a little weaker.